Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news the clamp on funds exiting China is starting to bite in our region. But first, the latest reading of American service sector shows a strong expansion, reaching a 12-year high, confounding some analysts with the scale of the strength. The new order component was particularly strong. Another similar survey showed gains as well above expectations. And the precursor ADP employment survey showed jobs growth of 135,000 in September, perhaps held back by the hurricane disruptions, but bang on analysts' expectations. The US non-farm payrolls gains are expected by the market to be 80,000 when announced on Saturday. Both data are the lowest numbers of the year, and I suspect there's some upside here. A strongly expanding American economy explains growing trade data elsewhere in the world. Double-digit growth in air freight volumes continued in August. Global volumes increased a remarkable 12.1% year-on-year, and volumes in the largest region, the Asia-Pacific region, grew 11.3%. Air freight capacity is also expanding. This growth explains the expansion in world trade and why Asian economies are making export gains. But clearly, growth at this rate cannot go on indefinitely, and industry insiders say we're nearing a peak. The Europeans are getting tougher on the tech industry's tax deals. The European Commission said overnight it was taking Ireland to the European Court of Justice for its failure to recover up to $13 billion of tax due from Apple, a move being resisted by the Irish. It also told Amazon to repay Luxembourg $250 million in illegal tax benefits. Meanwhile, EU retail sales growth stalled in August after a longish growth run. This might come at an awkward time for the ECB, who must be contemplating following the US Fed and halting more QE. Ireland has raised €4 billion in a new bond issue, but what makes this special is that it is at a negative interest rate. The debt, which drew more than €10 billion of demand, was mostly sold to overseas investors and attracted a yield of minus 0.008%, far below the 1.05% interest rate Ireland said its residual IMF loan balances carried last year. In Australia, there is mounting evidence of stalled projects undermined by the inability of their Chinese owners to raise funds to press ahead. They are caught in the clamp on moving money overseas by Chinese currency agencies. And remember, in Auckland, there are some very large developments dependent on Chinese developers, the long-term NGT Tower, for example, not to mention the sale of UDC to HNA, which is still uncompleted. In New York, the US Treasury 10-year yield is holding at 2.33%. The price of crude oil is down slightly yet again, now barely over $50 a barrel, while the Brent benchmark is just under $56. There was a big fall in reported US crude inventories in the past week. And the price of gold is basically unchanged today, still at $1,272 an ounce. And the Kiwi dollar is also unchanged from this time yesterday, still at 71.60 US cents, a 3-month low. On the cross rates, we're now at 91.2 Aussie cents and 60.9 Euro cents. Our TWI is now at 74.3. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.